You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors, Mark Longo, Dan Passarelli, and Jill Malandrino.
All right, everybody, that music means must be Education Wednesday here yet again on the old network. Yep, it's time once again for Options Bootcamp, the program where we break down the crazy world of options for you, the basic stock trader, maybe looking to dip your toes into the options waters. Maybe you already have dipped those toes. You found the water a little bit cold, a little bit frigid, a little bit uninviting. Don't worry. We'll be your lifeguards here. We'll walk you through what's going on. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. Glad to see so many of you are, enjoying the return of Options Bootcamp. It's weekly now. Glad to see you guys are mainlining that. And B, of course, we'll see most of you have upgraded there to the full network. This show's been running for a while, but we always love the newcomers here, so keep those reviews coming out there on the platform of choice. Got a ton of them out there. Still some 4.5 stars. This show's been running for so long, Dan. We're still threatening 5 stars out there with a ton of reviews. I guess people are liking what they're hearing out there, so keep those reviews coming. That keeps the influx of new people discovering the program. So A, we're glad you're liking it, and B, keep the new folks discovering it. These are crazy times out there. People can use Options Bootcamp probably now more than ever. So keep those reviews coming. Keep those questions coming, too. We do rely on you guys to see what you want us to talk about on the show, like we're going to do a little bit later today. And joining me on the program, first off, we got the black-hatted one again, my fellow Options Bootcamp drill instructor, Mr. Dan Passarelli from Market Taker Mentoring, new name for you, Market Taker Mentoring, as well as, of course, the author of a few seminal options tomes like Trading Options Greeks and a few others out there. Mr. P, welcome back to the Options Bootcamp drill instructor proving ground, sir.
Yeah, it is great to be back as usual, and thank you from me as well for everyone for listening to our show. We really appreciate it.
Yeah, the folks liking the boot camp out there. Keep that love coming. And also joining us on the NASDAQ hot seat today, you may know him from his other appearances on Education Wednesday through his own program, Options Playbook Radio. He's joining us today. He's slumming it here on boot camp, taking a break from his own program. Yes, it's the options guy himself, Mr. Brian Overby, a.k.a. the options guy, a.k.a. the senior options analyst over there at Ally Invest. Mr. Overby, welcome to Options Bootcamp for the first time, sir.
I'm ready to get learning about options today, so I'm excited. Thanks for the invite, and I'm ready to rock and roll.
All right, we're ready to rock and roll as well. Right on into a little bit of basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me?
right, everybody, welcome to Basic Training. And we've asked you guys have been giving us a lot of great feedback. We appreciate it all. We asked you guys, what topics are really top of mind for you guys right now? What would you like to see us cover on Basic Training? You guys had a lot of great suggestions. I'm just going to touch on a few of them. You had a ton. J4340 requested ratio spreads with puts. Well, you're in luck, Jay. We just talked about that not too long ago on the show with our buddy Mr. Rhodes over there. I believe it was episode 84. So if you haven't checked that out yet, Jay, you're perfect timing. Go check out episode 84. We did a whole lengthy discussion on the joys of ratio put spreads, a useful strategy, particularly maybe in this type of environment. So check that one out. Lloyd, LO7D. Let's go with Lloyd just for fun. He wanted trade adjustments, please. Well, another one. Dan and I have delved into that in the past. I don't have an episode number off the top of my head for that one. That one you got to go back a little bit. Check out the archives. It's probably 30-odd, 40-odd episodes ago. But we did a whole show on adjustments. Maybe it's worth revisiting that topic as well, Dan, because that is a pretty top-of-mind topic these days. But again, check out the archives. If you go into like an iTunes or somewhere else and they limit you to like the most recent episodes, you probably want to check out either our app or our website. Those are the two places. You can always go all the way back into our archives there. So if you're looking for archive episodes of Boot Camp and you can't get them for whatever reason on whatever platform you're using to listen to this, you can get them via our app and via the website. So they're all there. It's just a question of whether the platform you're using allows you to access them. But we have discussed that in the past. And we had a bunch of people who wanted our subject for today. Rashad requested, loving the return of boot camp. Well, thank you. He said, can you please discuss iron condors? Mika had a similar request. He said, you wanted iron butterflies versus iron condors. A little bit of a different flavor there. And then our old buddy Mark Brandt, frequent listener and commenter, he wanted optimal iron condor management. So a lot of votes for iron condors. So we're going to go there. Maybe, I'm not sure if we'll have time to get into all the other nuances you guys want right now, like butterflies versus condor. Maybe we will. And management, maybe we'll touch on those a bit, but we can always revisit those. But let's start off with the topic you guys want a lot of, which is apparently iron condors. So let's get into that. Let's start with the basics. And we had touched on this in the past archives as well. I encourage you, if you want a deep refresher on iron condors, check out the archives. Or maybe Brian's show as well, Options Playbook Radio. He has touched on this in the past as well. What is an iron condor? Think of it a couple of different ways. You can think of it as maybe effectively a vertical call spread versus a vertical put spread, both out of the money. So out of the money put spread, out of the money call spread. You can also think of it as a strangle around the at the money and then another strangle farther out of the money against that. So if maybe you're buying that one strangle and then you're selling the farther one if you're buying that spread, and vice versa. If you're selling that strangle and then you're buying the farther out of the money strangle to protect you. So there's a couple of different ways you can think about an iron condor. I'm getting to an example in a second. First, I want to bring on my cohorts here to kind of give us their top-of-mind thoughts about iron condors. We'll start with you, Brian, because as I mentioned, I'm sure you have a chapter in the playbook about this. What are your thoughts in general about iron condors, sir?
Well, the biggest thing when you're looking at iron condors is trying to decide approximately how far out of the money you'd like to go. So a lot of times when I'm thinking about iron condors, it's in the same conversation of a one standard deviation move and where the actual profitability lands. So I don't think you can talk about iron condors without understanding that concept based off of the implied volatility, but that's one of the first things that comes to mind. But as you mentioned, so you're selling one credit spread on the upside, and then you're selling a credit spread on the downside, bringing in two net credits to the account. When you're doing the trade, iron condors are, if you truly believe the old statement that most option contracts expire, which we know is not necessarily always the case, that's what the iron condor is trying to take advantage of, is that rate of time decay. And one of the best things about option sellers is that time decay is on your side, and that's what it's all about. Now, as far as an iron condor is concerned, most people really like to do the iron condor because they bring in the net credit, as opposed to just a standard condor where you're paying a net debit to the account. So the iron condor is obviously the more popular one as opposed to the regular condor overall. But you definitely like to do the iron condors, and it's one of the favorites of the clients at Ally Invest.
It is a popular strategy. You can find it in a drop-down in most major brokerage platforms there for a lot of reasons. We'll get into those. But first, Mr. P, the black-hatted one himself, what are your thoughts in general on iron condors? And is this a popular strategy people are coming to MTM a lot for these days?
Yeah, they're a pretty useful tool. I won't go as far as saying versatile. They do one thing and they do one thing well. There's a little bit of flexibility with them, but you wouldn't know it by looking at a chart of, anything right now. But most stocks kind of stay in a range over time. You got the high flyer tech ones and the ones where it's a disaster and they really head to the downside. And of course, when there happens to be a global pandemic of sorts going on, you get some crazy moves up and down. But during normal periods, stocks trade fairly sideways and with fairly low volatility. And this is just one tool to be able to take advantage of that and create a fairly high probability trade of winning. And to be able to put a few other things on your side, just to kind of add to some of the things that Brian just mentioned. It's not only just that people believe that most options expire worthless, which, as Brian pointed out, is, again, not always the case. But one thing that is factual is that since about 1987, most of the time in most stocks during most eras of trading, options have been overpriced. So by putting on an option selling strategy like an iron condor, you're actually putting on a statistically advantageous trade. Now, this is not always the case every time. We have to do certain analyses in order to understand that. But, that's one other advantage that can be gained by doing things like an iron condor.
I think it's true they do one thing, they do it fairly well. Let's walk through an example now since Brian's in the NASDAQ hot seat. Let's look at the old NDX out there right now. Over 10,000 out there in the NDX right now. So, yeah, if you were just looking at NDX from now and maybe from a few shows ago, you'd think nothing much has really happened over the past couple of months. NDX back again at new all-time highs. So, how the worm has turned, or perhaps not so much net. So coming into today's show, we were a little bit north of 10,000, about 10,070 out there in the NDX. I thought it was interesting, too. Both you and Brian, Dan, both of you defaulted to selling iron condors. Yet when we were pricing these up this morning to get some real-world examples for you guys, all the platforms we use all defaulted, on the brokerage side at least, to pricing up long iron condor. They're buying it. So I thought that's kind of it. Maybe it's a bit of a brokerage risk thing as well. They default to want you to buy premium as opposed to sell premium. But I thought that was kind of interesting. So we're going to go with a buying of an iron condor here because that's the way a lot of people are going to encounter it when they first see it on their brokerage platform. This particular one, remember, is kind of an out-of-the-money put spread, out-of-the-money call spread, or an out-of-the-money strangle against a farther out-of-the-money strangle. So in this case, with NDX around 1070, we priced up about a 10,000 put spread to the downside, buying that around 305 for the 10.5 put and about 285 for the 10,000 put. So you're talking roughly 20 odd bucks there as well. Again, these spreads are a little bit wide out there. And then you're talking about 10,100 on the vertical to the upside, the call spread, buying one of those and then selling the 10,150. So 50 handles in either direction there. Roughly symmetrical around the at the money. And that one's going to be also right around, we're talking about 280 odd for the July. These are, again, by the way, July. So July expiration, no weeklies. 10,100 call, about 280 odd and about 260 odd for the 10,150 odd. So it works out to, depending on the spreads, they're pretty wide, talking about between $41 and $51 there. So that's to pay it if you're going to buy it. Flip that around as a credit if you're going to sell it. Now, you think about it. If you're buying it, obviously, you want this bad boy to move like any strategy where you're buying premium. Outside of the time spread, which you talked about last show, which makes that one kind of counterintuitive. But outside of that, typically when you're buying premium, you want this thing to get the heck out of Dodge and move, and that's what you want here. You want this thing to at least move through the strikes that you're buying, which in this case are roughly 20 odd to 30 odd handles away from the at the money. So this thing's got to move, and it's got to move pretty quickly in order for this thing to pay off. Obviously, if you're selling the iron condor, reverse that. You want this thing to stay right in the tight little range where you're selling it and not really move, so you can collect the lion's share of that credit through theta decay. So a lot of interesting things to break down out there. Brian, let's go back to you. Let's talk about some use cases. When do you like to use iron condors, and when are you perhaps a little bit more skittish about using iron condors?
Well, when I'm looking at an iron condor overall, you're looking at an index, and I'd be leaning more towards indexes. So here's the way I look at an index. I think I want some volatility with some probability, which is really an oxymoron when it comes to most things in the marketplace. But the index kind of gives you that. And you have an example here with the NASDAQ. But the one thing that's nice about the index is the large gap openings don't happen as often as they do when you're looking at individual stocks. You can get a gap opening, but a huge gap opening in the NASDAQ would be a 2% gap opening. And, in either direction, because obviously you're talking about an iron condor. So if we're talking about selling them, which I think that's the topic right now, I see our example is a buying of one. But if I'm talking about selling iron condors, I want to avoid those gap openings. So if I'm thinking of stocks, I don't want to be in an iron condor around earnings. That's really not my goal. I'd prefer to do it in an index just in general, but sometimes with indexes, you just don't get enough premium because it doesn't quite have the volatility. So if I want to do it in a stock, I want it to be in a more stable stock, a little bit more predictable stock overall. As far as movements are concerned, but I still want to have a little bit of volatility. So when the indexes are where I lean to when I'm talking about iron condors, or I want to find a stock. I don't want to be doing these honestly in a lot of the FANG stocks, which are a part of the NASDAQ. So I'd much rather just do the NDX or something that tracks the NDX as opposed to looking right at Apple, Facebook, Google. Those type of stocks are scary because of the big gap openings that can happen. Always want to avoid earnings too when I'm looking to do it. So I'm not going to go out to a potential earnings environment, 3 months or longer in time. I'm going to pick a different time frame that's going to avoid that overall.
Uh-oh, Brian, you're just sticking a dagger through the heart of a lot of our listeners. I just know from engaging with them, hearing from them, hearing their feedback, that a ton of their use case for them is going to be around earnings in single names like Apple and Amazon. And Brian, you just threw cold water on all their dreams, sir.
Well, I apologize for that. But I guess it's just trying to make your point about I'd rather be in an index. If they're going to be announcing earnings, I would rather be doing it in an index that contains those underlying stocks as opposed to just doing it on that underlying stock.
Dan, same questions for you. Where do you like to play with an iron condor? Could be short or long or both, however you like to look at an iron condor. And then B, maybe as Brian laid out, where do you not like to play with an iron condor, sir?
Yeah, this could be a really long answer. So I'm going to try not to give a really long answer.
We have about 10 minutes, so fill as much as you need, sir.
All right, we're going full Mr. Smith Goes to Washington filibuster over here. All good option trading is opportunistic, right? There's never any time where somebody can say, you should always on this stock do this one same thing every time over and over again, and you'll always make money. Like anybody who's traded for a long time knows that there's no truth whatsoever to that. So we look for different situations, and the times when iron condors work, because they're a premium selling strategy when you sell them and a premium buying strategy when you buy them, is if you want to be selling iron condors, you would really only want to do that when options are overpriced, which means implied volatility is higher than it should be. And there's some analyses that we've talked about on the show before to understand how that works. Go back and listen to some previous episodes. And so maybe that's why this popped up on the brokerage platform. Maybe they were thinking volatility is underpriced. But as I look at it, I'm looking at the NDX volatility chart right now, and that sure does not look like the price or does not look like the case. So it looks like this is just sort of like a pure, like looking at the chart you posted here in our notes, Mark. Looking at it, looks like it's just sort of a pure break-even strategy where in this case, because they're buying such a narrow guts iron condor, and the guts is like those two middle strikes for those of you who are newer to this. It's a high probability trade, but geez Louise, man, I am looking at this, and best case scenario, you make I don't know. I mean, I don't think it tells it. Oh, it does tell us what we make. We can make $2,000, or I don't know. You can make not a lot of money, but if for some crazy reason we fall within this 0.5% range on July 17th, you lose your shirt, So it's, I don't know. I mean, I'm not a big fan of this particular one that we're talking about. All that being said, so when I choose between buying or selling iron condors, you have to look at a volatility chart. Learning how to read a volatility chart is one of the best tools that you can use as an option trader. As far as indexes or individual stocks, I mean, I don't care. They're just kind of different. Like indexes don't have as much event risk because earnings is not really going to affect them like they do an individual stock, and individual news about a particular company is very diluted when it comes to indexes, so you don't get that. On days where there's like a Fed announcement or something, or unemployment, that's going to affect all stocks as well as indexes. But the thing is like you get less event risk, which is better when you're selling iron condors. It gives you a better chance of success. But the fact of the matter is you collect less premium for it, and that means when you win less, and when you lose more. So it all really balances out. Like, to me, it doesn't matter if it's an index with a higher probability of winning but a lousier payout structure, or if it's an individual stock where it's not quite as great a chance of winning but still way high probability, but with an even better payout structure. So I don't know. I mean, it doesn't matter. Just look for great opportunities, train yourself to read volatility charts, and it's a great tool. It's a great tool, man.
Yeah, I thought it was kind of funny as well that most of the platforms we looked at to price up this NDX Condor all defaulted to buying the thing, which was kind of interesting, which, again, why we priced it up that way so people can see if they're going to counter it in their brokerage platform that way. That's the way we want to talk about it. But you're right. I always typically think of an iron condor, usually through a premium harvesting type approach. We have a lot of other questions people have asked about different flavors of iron condors. Not going to have time to get to all of them, obviously, today. I think this is obviously a topic we're probably going to have to revisit, maybe getting into the management and mistakes and things like that. But Brian, let's go back around the horn and give our people here some final thoughts you might have on iron condors. And maybe I'll give you a chance to chime in on some of the other questions they asked very briefly as well. Like, for example, do you prefer iron condors versus iron flies? I'll throw in what I know is your personal favorite as well, which is the skip strike fly. I have a feeling I know where you're going to land on that. But maybe if you have any thoughts on that. Maybe you have any thoughts on mistakes people make when they're typically using iron condors. And then B, if you have any tips, as some of our listeners have asked, for optimal iron condor management, have at it, sir.
All right. Well, if I'm looking at an iron condor overall, my biggest thing about doing the iron condors recently is they shouldn't have worked out, because ideally, even though the volatility index is high right now relative to what it was, a year ago, in that it's trading around 27% implied volatility today, the market has actually been more volatile than what the marketplace has implied. So in this marketplace, and actually, so just to talk a little bit about iron condors and what's going on in the current marketplace, I've looked at actually doing the buying of the iron condor, or another way to look at it are long straddles, where the market has actually moved more than what the market was anticipating. And that's really kind of been true. If you were just looking overall over the last month at long iron condors or short iron condors, the long iron condors in general would probably be a big winner, just because of the way the market's been and the V-shaped recovery that we've had and everything that goes along with it. So you can also skew the iron condor, and that's kind of the way that I like to look at them. I very rarely want to do it just around. I want to lean bullish or lean bearish, so either I'll lean to the upside or lean to the downside. So that's one way that I'll approach it. And then you talked about this versus a butterfly. Now, a butterfly, for me, I kind of like the skip strike butterfly that you mentioned, and you knew that. And that's mainly because I can do a skip strike butterfly, and I can target either the downside or I can target the upside. And I can give myself 3 different scenarios that wins, in that the market can go up towards my short strike. That's a good scenario if it doesn't go beyond. It can stay right where it's at, or the market can drift just a little bit higher. So in all three of those scenarios, the skip strike butterfly can win if you do it on a directional basis. The only way that it really hurts is if you get the huge gap opening where it skyrockets and you can't actually trade out of the position. So I lean towards that type of strategy as opposed to just a flat-out iron condor right now. But if I'm selling an iron condor, I would probably skew it to whichever way the market is trending to try. So either I might, right now we're kind of in an upwards marketplace, so I might skew it a little bit. If I'm looking at the index, I'm going to go a little bit further out of the money on the call side than on the put side. And back when we were tanking, I'd go further out of the money on the put side as opposed to the call side. So if I'm looking at those type of trades, that's kind of the range that I like to be in. And then you also want to think about your time frame. I don't necessarily want to do a 1 week iron condor. If I do a weekly iron condor, it's an all or nothing trade. There's really no adjustment that you can make to that trade, and there's actually really no protection. If I'm looking at an index, but you were talking about the NASDAQ, that's a very expensive index, but let's say just the SPX or something that's just not quite as large of an index overall. If I'm looking at those type of indexes, I'd probably go out about 30 days. I'd like to have that ability to adjust that iron condor. And I like that time frame much more than the short iron condor, which is just basically an all or nothing type trade. Now, that obviously depends on the index and the amount of time premium that's in that index that you're trading. But those are just my general parameters of it. And then I mentioned one standard deviation move and what the expected move is over that time period. And you definitely want to be aware of that time frame when you're picking out your strikes overall.
Yeah, Brian, you've been killing it lately on OPR, just on the long straddles, which again shows you what kind of a crazy environment we find ourselves in these days, listeners. But that music, unfortunately, means we come to the end of this quick overview of iron condors. I have a feeling, given your queries, we'll be coming back to this topic in a little bit more detail in the near future. But before we do that, let's go around the horn. Mr. Passarelli, let's start with you. If you have any final real quick thoughts you want to share on iron condors, have at it. And then B, if folks want to reach out to you over there in MTM land, where should they go? What should they do?
Yeah, one real quick thought on iron condors that I forgot to share last time is we're looking for, not only are we looking for low volatility, but we're looking for non-trending volatility. I look at something like the NASDAQ and selling an iron condor on there right now, it's kind of silly, it just keeps trending. Even if the volatility stays low, it can go through the short strike to the upside. So I wanted to throw that out there because I think it's important. And you guys know where to find me, markettaker.com. We're redoing our website, and it's probably going to take at least another 30 years because it's taken about that long so far, but we're working hard on it. So those of you who are listening to this on a recording a year or so from now, you're going to find a really great website.
I like that. Optimistic. Because there are folks are coming in many months and indeed years down the road checking these out. So those of you who are listening down in the future, enjoy Dan's new website, markettaker.com. 2 T's. I always forget the second T. 2 T's over there. And Brian, if folks want to check you out, maybe for some long straddles you've been talking lately, but also skip strike flies and everything else. Or maybe they want to kick the tires over there at Ally. Where should they go? What should they do?
Well, obviously, first thing is to just stay on Options Insider Radio and check out Options Playbook Radio. But you can also just email me if you got any questions. You can email me directly at theoptionsguy@invest.ally.com and check out our YouTube page. We've been doing a lot with YouTube recently, and we have a stock play of the day that we talk about every Monday afternoon. So please check those out.
There you go. Check them out. Options Playbook Radio. It's part of Education Wednesday here on the network. You get a taste of Options Boot Camp. You get a dose of Options Playbook Radio. It's fun times. If you're listening live, you get to hear Options Boot Camp at least a little bit early before it hits the network, and indeed sometimes a week early, depending on how the episodes shape up there. So if you want to get that education in your ear holes right away, join us on the live stream. Otherwise, of course, Education Wednesday on all the major outlets is the place to go. And, of course, kick the tires over there at Ally Invest. Maybe you can find out for yourselves if their platform prices up a long iron or short iron condor. Only one way to find out. Ally Invest is the place to go. On behalf of Brian and Mr. P and our friends over there in NASDAQ land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Going to get to them next episode, and we'll see you back here next time for more Options Bootcamp.
Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.